Hi, welcome to Stock Chat. Today I want to provide a quick summary of DoorDash S1 filing. The filing day is November 30th, 2020. So, DoorDash had three types of share. Class A is one share equal to one vote. This is what being offered to the public. The number of share being offered is 33 million share. IPO price is $75 to $85 per share. IPO day is TBD, but rumored to be December 8, 2020. Ticker symbol is DASH dash. Class B is one share equal to 20 vote and is convertible to Class A at any time. Class C has no voting right. Lockup agreement. In general, executive, director, and major shareholder are not allowed to sell the share until 180 days after November 30th, 2020. So starting on May 29, 2021, they can sell as many shares as they want. So it's an important date to keep in mind because of the potential share dilution. There is an exception to this agreement called early lockup expiration date. Basically, when the early lockup expires, 20% to 40% insider share are eligible for sale that end up to be around 113 million share. Now, for the early lockup expiration to trigger, several conditions must be met. First, it has to be at least 90 days after November 30th, 2020. So basically starting at February 8, 2021. Second, at least one earning has been released to the public. So we are looking at the first and second earning release here. Third, stock price must be 25% higher than IPO price for 5 out of 10 consecutive trading days. So, as an investor, you should be aware of the special day in anticipation of any share dilution due to insider selling off the share. DoorDash have several risk factors that any investor should be aware of. DoorDash has incurred net loss every year since inception. Net loss of $667 million in 2019 and net loss of $149 million in 9 months of 2020. DoorDash expected costs to increase over time and loss will continue in the future. DoorDash has well-known competitors like Uber Eats and Grubhub that threaten its market share. DoorDash might face unfavorable regulation in the future. For example, the potential reclassification of Dasher as employee instead of independent contractor, which will negatively impact its business model. On the upside, DoorDash has 18 million consumers, 390,000 merchants, and 1 million Dasher on its platform. DoorDash holds the largest market share in the US as of September 30th, 2020. For instance, DoorDash has 50% of market share in the US, Uber Eats has 33%, and Grubhub has 16%. Currently, US consumer on DoorDash platform is account for less than 6% of total US population. The gross order values or GOV of DoorDash is less than 3% of off-premise spend at restaurant and other consumer food service in the US. The 3% GOV of DoorDash is equivalent to $8 billion in 2019. So there is a huge market potential for growth here in the US alone. As you can see, there is a steady growth in DoorDash revenue, $291 million in 2018, $885 million in 2019, and $1.9 billion in just 9 months of 2020. So of course, the huge growth in 2020 could be due largely to the stay-at-home order and limited indoor capacity of restaurants, as well as health concern in general. Whether this growth will sustain in the future is still a question mark. Between 2018 and 2019, we see a huge increase in net loss from $204 million net loss to $667 million net loss. However, due to the exceptional growth in revenue in the first 9 months of 2020, net loss is reduced to $149 million. As of September 30th, 2020, DoorDash have $1.6 billion in cash. However, total liability of $1.4 billion. It's not clear from the S-1 filing how much of the $1.4 billion is short-term liability or long-term liability. But even if we assume all of the $1.4 billion is short-term liability, DoorDash still has enough cash to pay that off, which is an encouraging sign. Both year-over-year total order and quarter-over-quarter total order show steady growth. For example, 83 million order in 2018 grow all the way to 543 million order in just 9 months of 2020. As you can see, quarter over quarter, there's a steady growth from 2019 to 2020. So this is a good sign also. For marketplace gross order values, which is defined as the total dollar values of order, we also see a steady growth. For example, $2.8 billion in 2018 that increased quickly to $16 billion in the first 9 months of 2020. So, in conclusion, like many other startups, DoorDash business is not profitable yet because they are still in the growth phase. The total order and gross order values show that they are indeed growing at a healthy pace. Another strength of DoorDash is that it has the largest market share of US food delivery service, which is very important for DoorDash in order to compete against its competitors. So, I hope you find the information in this video useful to you. And as always, please share your thought in the comment section below and let me know what types of video you would like me to produce in the future. And thank you for watching.